everyone, welcome to Trend Talks. And today I have the pleasure to talk with Joe Kastner. He's the CEO and founder of Radian Generation, an independent solar asset management company and advisory firm in California. And Joe has a track record of over more than 20 years in the solar industry. He was involved in solar project development in the early 2000s already, and Radian, a company, has already over 3 gigawatts of solar projects under management. Welcome, Joe.
Thank you, Edwin. Good to be here.
Happy to have you, Joe, all the way from California. Yeah, there is a crisis going on, not only the bushfire crisis in California, but the COVID crisis. How do you see this impacting the asset management in California and in the US?
I think it's an interesting aspect of something that's getting, much more scrutiny and focus, just asset management in general. When the industry started and really kind of blew up starting in 2005 and grew, that was because of the investment tax credit and the way that it's structured. It incentivized projects being built and really created the basis for where we are today. But it takes away the risk and it brings a lot of benefits to the table that are purely from building the projects and tax credits and depreciation. And so there was less of a focus on the actual operations of the sites. And as the inventory of projects have come out of that tax hold period, and different types of investors have come to the market more recently around some of the bigger assets, there's just this much more concentrated focus around cash available for distribution and actual performance of the sites, which leads to, how do you do asset management better and how do you make sure these projects hit their pro formas, but, hopefully exceed their pro formas, and always being on the lookout for ways to optimize the revenue potential and possibilities for the projects. And I think just the cost structures have brought solar into more places, especially in North America, and that's led to us seeing more and more different types of extreme weather, and projects were centered more around Southwest and where the resource was greatest. You have kind of similar weather most of the time. We're starting to see some bigger fires nowadays that I think will start to impact the resource in ways that we're just starting to experience. But, as we've moved east, New England with snow impacts, Ontario was obviously kind of first to that and dealing with cold weather and snow impacts. And now projects moved into the Southeast and you have vegetation management and now hurricanes coming through, dealing with wind events, and Texas blowing up with projects, and hail has become a major factor now as well. And so all these pieces are, I think part of that new and types of weather that we need to deal with and really understand from an asset management perspective.
Before we dive into these details, Joe, I was curious also to hear your vision on what do you think is going to happen in let's say next year, as following from this current financial crisis. How do you see this impact the market in the US?
Yeah, I think the big question right now is around tax equity and how that is available for different segments of the market. I think we've seen it be much less of an impact on the larger utility scale plants, these kind of projects that are right down the fairway for these investors, and those are plotting ahead pretty well. We're seeing some, definitely some resurgence on the commercial side, which is good, but I think there's still some question marks about, the available capital for those projects. And then community solar, which we expected to really start to blossom this year and into next, is also a very interesting credit story around the revenue structures there and what that means for tax equity. I think it's certainly going to impact it. Obviously the investment tax credit is starting to ratchet down, so they're becoming a smaller piece of that capital stack, but still a very important piece that is needed to make sure that those segments of the market can grow.
Will this be impacted by the upcoming elections or not that much?
Yeah, there's a lot of momentum in solar, so I think there's ways to accelerate things and to really leverage the current situation we're in and try to create better structure for new jobs and a real story around that coming out of the current financial crisis, which is a really good one and important, and I hope we can capitalize it. And obviously different administrations have different views on what that means. And so I think when we've looked at, the industry data, there's a pretty big uncertainty, some error bars around what's expected for growth for the next years. And a lot of that is dependent on policy and what comes out of this upcoming election. And I think it'll be different depending on who's in office come next January.
Let's dive a little into the extreme weather. What do you consider as the most underestimated extreme weather conditions if you look at the asset management of power plants?
Yeah, I think what's on top of a lot of folks' minds right now, and as projects are being built in kind of the hail corridor in the central part of the US, that's becoming important. And just as part of the hail and part of the kind of the hurricane paths, just more wind events, and ultimately what that means for module health and how that impacts insurance claims or warranty claims. And how do you set your projects up right so you have the data to ensure that you can process those things when they happen, and you have sort of a baseline of what module health looked like before the event. And I think that's going to be pretty critical. And just taking Texas as an example, in the next 2 years, I think there's 20 gigawatts of projects currently in the interconnection queue, in a much bigger group after that. So there is going to be a lot of projects that are in the path of potential hurricanes, in the pathway of hail events, and that's going to have an impact on insurance markets for sure.
Do you have examples of what the downtime is when such an event is occurring that people didn't expect?
Yeah, I mean, there's been kind of one publicized event really that has occurred at this point that was a significant claim, and I think a lot of people are learning from that and what that means. It just really depends on a lot of things. And did you see it coming, and did you have a stow strategy implemented for a tracking system, and did you set that up in a way to minimize impacts? And was the hail of significant size? You can obviously have much larger and smaller hail events that have different types of impacts depending on the situation. It can really vary. We've seen some probably bigger impacts and just more instances at this point of extreme wind events and what that means for the underlying infrastructure. I think with a hail event, you may be swapping out a lot of modules. With a wind event, all of a sudden you have a lot of other electrical work and replacing home runs, full strings, and sometimes even some tracker damage. And that, I think, can be a bit bigger situation from a time perspective of getting back online than placing modules here and there that could have been impacted.
Do you have like a percentage of what that means for revenues on a yearly basis? Are you confronted with such an event?
The events are so different. I don't think you can really have a rule of thumb, but it's certainly something to prepare for.
Is there a trend that you are seeing in asset management more in general that you think is worthwhile to watch?
I think that we've seen technology coming in ways that can make things a lot more efficient. There's been obviously a lot of publicity around using aerial thermal scans, as a means for monitoring. Something that had, for OpEx cost considerations, had really devolved down into, you do some IV curve testing on some percentage of your site each year, and the aerial scans now allows you to get pretty similar data on 100% of the site and for a much cheaper cost. And so that's been a really interesting thing. I think for the industry, I think we'll see more ideas like that coming with data and sensors, and allowing you to have better visibility on the site all the time. I think just when you look at where the drone technology can be used, when we get to a point of having tethered drones or autonomous drones, now all of a sudden you start looking at doing those flights much more often. You don't need to do them just once a year with getting someone out there to fly. Now you could using it for security, monitoring, for a whole bunch of other aspects, and getting that kind of data much more frequently. They all feed into what we're seeing as just a need for more comprehensive, more enhanced asset management, in the US, as these projects and more of the projects get out of this tax hold period and the actual cash on cash based return, that more traditional investment structures come into play. It just becomes more and more important for these projects to actually perform.
Final question, Joe. What would be your advice for the asset managers that are still considering what kind of services they would need? Is there anything that you would give as an advice to them?
It's really having a good view down the road. What's happening next? I think Texas is a really good example of what's coming. Solar projects are growing up. They're moving into merchant markets, hedges. These projects are starting to trade energy like traditional power plants, and that's something that hasn't really been seen yet. And as a result, it gets all these little nuances around weather impacts and things. You just need to be able to see those coming and make sure that you're set up and resilient around solutions for them, because that's becomes even more important when a certain day in the summer in Texas could be your revenue strategy for a much bigger portion of the year than what we've seen traditionally with fixed price 20-25 year PPAs. It's just a completely different strategy and way to manage the project.
Oh yeah, interesting. Well, thanks so much, Joe, for this interview. Wish you good business and a good day in California.
Yeah, thank you.
All right, bye-bye.
Okay, see ya.